Hi guys, welcome to 2026. Last year was one of the most chaotic years for financial markets in recent history. Tariffs returned, the US government shut down, interest rates shifted, the market swung between high and uncertainty. So in today's video, I'll break down what really happened in 2025 and how it affected stock, gold, inflation, and the global economy. So this is what I'm going to be talking about. 2025 was one of the most predicted years for US markets, that was for sure. Tariffs and trade war, policy change, plus market noise, government shutdown, policy gridlock, economy effects, before Fed law policy and interest rate, monetary response to uncertainty, stock market journey, crash rebound, record high, six, inflation versus customer reality, macro versus micro, and number seven, Bitcoin. So let's get into it. The first is the Trump tariffs policy and the trade war. Um, US government imposed a broad set of tariffs on imported goods throughout 2025, raising the average tariffs level to its highest since 1930s. Some tariffs increase were delayed at year ending after uncertainty and negotiation with trade partners. Tariffs targeted multiple countries and sectors, sparking retaliatory tariffs and global trade tensions. Um, how it affected the economy and the impact and the market impact. So tariffs slowed down hiring across key sectors and raised costs of imported dependent industries. Hundreds of US companies filed for bankruptcy, particularly in manufacturing and energy sector, caused by tariff pressure and inflation. Commodities market saw volatility, gold soared, while metal like copper saw demand distortion from tariff fears. JP Morgan warned of a stagflation like slowdown, high inflation plus slow growth driven by tariff policy media. So what this simply means is just that throughout 2025, it was just the Trump trade war, the tariff policy, but at the same time, it accumulated money for the US government. For the first time in 1930s, the US government have accumulated more than, if you look at it in October 2025, you can see about 205.4 billion dollars. That's what the US government accumulated as at 2025 in October. It has been the highest ever since. It has been the highest. So this is what really happened. And um Trade tariff rates have surged to around 16%, the highest level since 1935, leading to a sharp increase in tariff generated revenue this year. The federal government collected about 195 billion in custom duties in fiscal year 2025, more than 250% of what is collected to the premium fiscal year, and increased to which tariff contributed. Even, even accounting for the revenue, the budget deficit for FY year 2025 reached $1.8 million. So that's it for the tariffs. That's what basically happened about the tariffs, and it was crazy. It was crazy. If you're a micro trader, you would have gained it more because US equity gained about, there was a lot of the US equity closed, or almost all of them closed at all-time high this year. We'll get to do that. So second is the US government shutdown. It was the longest in history. So what really happened? Congress failed to pass a full budget on time, triggering a government shutdown from October 1st to November 12th, 2025, the longest on record at 43 to 44 days. Lawmakers eventually approved temporary funding to reopen the government and set a new deadline in 2026. Economy and market impacts. The shutdown disputed economic data collection, complicating policy and decision and market forecasting. Federal spending cuts and pause in government purchase knocked off some GDP growth. Investors reacted to caution, but historically, shutdown alone have not always caused broad market sell-off. So, what this simply means is just the shutdown that happened in October. There was a shutdown that happened in October. So the shutdown happened and it really triggered a lot of things in the market. But at the same time, despite those rumors about everything, all the economists this year was just forecasting a big downtrend. It was forecasting a big downtrend that the economy is going to be a recession and all that. But still, yes, the market still triumph after everything. After the shutdown, after the US government was open, the federal government had to pause rate. So at the end of the year, the market still triumph. So this is the key takeaway. After 43 days, the longest US government shutdown in history has ended, but all is not yet back to normal. The delayed publication of official economic data is impacting the Federal Reserve, which is muffling the prospect of future rate cuts. The shutdown is expected to reduce the GDP growth rate in the forthcoming quarter and raise it in Q1 2026. So due to the shutdown, the Fed government had to cut rates again in December, and it really helped the government. And also, the shutdown also affected them. It didn't make them also know what they were doing at that moment because they were not able to analyze the economy. They were not able to get reports. So it was really difficult for them. It was a really tough time for them. So let's see our number three. Let's go to number two. So, Federal Reserve and interest rate. In late 2025, the Federal Reserve cut rate interest rates the third cut of the year in response to slow growth, inflation concern, and tariff-related uncertainties. This move really reflected internal disagreement at the Fed on how to navigate growth versus inflation risk. Why this matter to marketers or for the market? Lower rates typically boost stocks price and lower borrowing costs, but they can also signal economic weakness and shift investor sentiment. That's one thing about lowering rates. That's why the Fed government can just lower rates anyhow. They can't just cut rates anyhow. Despite Trump was pressuring the Fed chairman to cut rates. He just wanted Fed chairman to cut rates 1%. In fact, but he can't just cut rates because it first of all it's very good for the economy if you cut rates. It boosts the stock prices and lower borrowing costs, but also it always signal a weakness in the dollar. It always signal a weakness and always shift investor sentiment. So that also can also trigger inflation in the economy. So that's why the Fed chairman can't just cut rates anyhow, despite the US government was pressuring so bad, he could not cut rates immediately the way they wanted it. So this is what happened after the shutdown. The US CPI. This is the chart right now. This is the chart right now. This is what happened at the CPI. The CPI dropped from 3.0 to this point. It was about 2.7. It was about 2.7. You can see that 2.6 at this level. So it was about 2.7. You can see this blue market was about 2.7 before the year closed. So everything came back to normal and everything became normal, which core CPI, which excluded volatile food and energy price, rose to 2.6 over the same period, US Bureau of Labor Statistics. So everything came back to normal and everything was good at the same time. But what I don't know about next year is if Trump is still willing to change the Fed chairman because he had that last year. I don't know if he's going to do that this year or if he still have that in mind. So just stay tuned, guys. Whatever news that comes out, I'll definitely drop it here. So let's go to number for the stock market roller coaster, crash rally, and record high. Crash volatility, a self-market sell-off occurred in nearly April 2025 when new tariff announced rattled investor confidence, triggering one of the largest short-term declines since 2020. Now, I don't know if a lot of you experienced this, but I experienced this. It was called Liberation Day, so-called Liberation Day. Yeah, it was crazy. It triggered a lot of downtrend, and this is what happened. That was April 2nd, 2025. Trump unveiled sweep tariffs. It was called Liberation Day. This is what happened. You see that the stock market, the S&P 500, dropped down about I think if you analyze it from the chart, this was about 25% downtrend. It was about 25% before it started buying and started going back up. And you see that December 30th, 2025, it was about 6,896. That's crazy. It was about 6,896. The S&P 500 is about to hit $7,000. So that's crazy. After the Trump unveiling sweeping tariffs in April 2nd, the so-called Liberation Day, man, it was crazy. Despite the fears and political uncertainty, stock market ended 2025 near record high. S&P 500 up to about 16%, Dow Jones plus 13%, and the Nasdaq was about 20%. The bullish tech valuation and AI optimism powered this rally. So basically, what this means is that the AI industry and the tech industry powered this S&P 500, Nasdaq, and Dow Jones, powered every other thing in the US. That's what is happening right now. If you're not into AI, I advise you to start using AI. AI is what's happening right now. Everybody is using it, and is what basically is fueling this market right now. So the market takeaway, tariffs and shutdowns spark volatility, but tech and AI restored but tech and AI sector led to a strong rebound and pushing equity market into resilient finish. So let's go to number 5. Inflation and customer confidence. Inflation cooled later in the year to 2.7%. That's what I just showed you guys. Inflation cool off. Yeah, the inflation cool off. Customer often felt less confidence than macro data suggested, highlighting the disconnect between financial markets and everyday experience. So it's about the micro and macro. It's just the same thing. If you're a micro trader, this year you definitely had a good year. It was a good year at the end for macro traders. And I can't say the same thing for micro because I don't know how you trade. Because micro basically means you're a day trader or you just trade short term. Understand? It's either you're buying short term or you're selling short term. So that's what basically means for macro. And macro are the large traders, people that hold trades year in, year out, position traders. So for me, I do both. Understand? I do both. I do both macro and I do both micro. Understand? So I have stocks that I bought at this year, and they did well this year. Yeah, they did well this year. I bought stock at April, that Liberation Day. I bought deep, and I also bought stock recently at November. There was something that happened. The AI bubble. The AI bubble almost busted because the AI bubble has been since the year 2000. The AI bubble has been wrapped. So AI bubble, but it hasn't busted. And he almost at November, and I bought some stock, but at the same time, these stocks are doing well right now. So I'm gonna be dropping some stocks maybe next week, or yeah, next week for you guys if you're not into stock. So you can start buying stocks now. It's very good for you to have for you to own a stock. And mind you, if you're not ready to hold a stock, any stock, if you're not ready to hold any stock between a year and 2 years, I advise you don't get into stock trading. You don't bother to buy because you don't know what's going to happen. So you're going to be able to hold it for the next 2 to 3 years. So that's it. So what are we talking about next? All right, so we're talking about Bitcoin next. Yeah, so Bitcoin rose about 90,000, yet option data show traders not comfortable with downside risk exposure. To me, I still believe Bitcoin is still creating a low. Yeah, Bitcoin is still creating a low around this level, still creating a low around this level. That's why you see the market is still around this level, is creating a low, and I think this low, if you want to buy Bitcoin, this is a very good time for you to buy Bitcoin. Yeah, you can buy Bitcoin because at the long run, it's going to buy this. It's not possible that Bitcoin is not going to buy. There's too much there's too much volatility in the market. There's too much, and everyone is trading Bitcoin. So definitely the Bitcoin market is going to buy eventually. So this is a good time for you to also buy deep, and it's still creating those low. It's still creating those low, and that's what's basically just happening. So that's it for Bitcoin. At the end of the day, it's still going to buy. So if this video was educational for you and you really enjoyed it, don't forget to subscribe to my YouTube channel and also leave comment below on what you think is going to happen. What do you think is going to happen next? Is it AI? Is it US government? What do you think is going to happen this year? I'd like to talk with you guys. If you enjoyed this video, you like the breakdown, subscribe to more market highlights. You think the crisis will come from politics, inflation, or something else entirely? So just let me know in the comment section.